Chairman Powell, money machine going brr. Chairman Powell, he ain't playing, this a blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, what up? Federal Reserves in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rising the power. Yeah, he's the chairman of the board, making moves that empower.
Let's go. Smash those likes, hype it up, subscribe, boys and girls. It is Chair Powell. Time for him to make that money machine go burr.
Gotta follow the data, ain't no time to air.
Let's go.
Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserves in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rising the power. Yeah, he's the chairman of the board, making moves that empower. Chairman Powell, money machine.
What up, boys and girls? We are back. Welcome to the home of the FOMC. That's right. This channel invented the hype beast train that is Chair Powell. We made him the international celebrity that we see today. Facts are facts. A lot of people jumped on the bandwagon. They like to stream these too. It's okay. You know, we have good ideas. People want to copy them. That's just the nature of good ideas. I appreciate you guys for tuning in. I know you have a choice in where you watch your Chair Powers. This is the best one. Today, I know you hear it about it's clickbait, is this or that? No. Today is very likely the biggest FOMC of our lives. We've said it before, and it's been true in the past, but there's just more and bigger and greater and crazier things happening in the markets, and you know it. So what's the spice today? Why is today so weird? Why is today so big? If we look at the interest rate probability predictor calculator, it says about 0% chance of an interest rate hike or cut. Markets basically pricing in a nothing burger, but there are elements at play here that have never been at play before. These elements make it so no matter what happens today, shit's gonna go down. For just being real, shit's gonna go down. So here is the scenario. Let me paint you a picture. In November, America voted to elect Donald Trump, kicking out Biden as president. I believe, actually, Chair Powell wasn't he appointed during Trump's original? Either way. I think it was during his original presidency. But either way, he has ruled over the Fed, Chair Powell. He has done what he thinks is best to address his dual mandate with the data he never seems to have. However, we have two conflicting sources right now. We have heard Trump say that he demands a rate cut. Now, I'm not going to be the one to tell him this because, yeah, who am I to say? But that's not really how that dynamic works. The Fed, so you guys know, is not part of the government. It is like technically, I think, a private business, which is an odd thing to say, but it is not part of the government and does not abide by that hierarchy. So the Fed does not take direction from the government. However, a lot of things are happening right now that don't seem to happen in the past. We see a lot of new kind of things going on in the government, and Trump kind of demanding things and getting his way has worked for him so far. He is the president again. And to say, can he fire him? No. But God, I don't know, guys. So we have Trump saying, cut interest rates. However, we have economic data coming in saying maybe we need to raise interest rates. It doesn't seem as if inflation really has cooled. It doesn't seem as if inflation is going to continue cooling. Remember, we cut rates when we're having good signs of inflation coming down. We increase rates when inflation gets out of control, especially with some of the talk going on with tariffs, maybe removing immigrants. There are reasons to believe that the price of things may go up. Actually, even recently, getting rid of income tax and having a total just a sales tax and everything. There's reason to believe that inflation is going to continue, maybe hotter than we've even seen it burn. That would justify interest rate hikes, not cuts. So either way, we have a nothing burger, but the nothing burger, no rate change, means that the Fed has ignored Trump, which is probably what should happen, but we don't know. We have the crazy outcome of an interest rate hike that would probably just send markets spiraling down. And then we have, honestly, even equally outlier, an interest rate cut today. That likely would send markets straight up, only up, moon pumpy pump time. This is going to be interesting. There's really no boring way out of this. However, leave it to Chair Powell to make it boring anyway. We're going to try to make it interesting. These are not the spiciest events typically. However, price action commonly is. On this chart in front of us, we have Bitcoin on the top and the US dollar, or Dixie, on the bottom, the strength of the dollar. We have marked out here when the interest rate decision is in. That's going to be 24 minutes. We're going to look for that together. We're going to Google it together. And in just under an hour, Chair Powell himself will speak. You're the best, Sheriff. Chair Powell himself will join us live. Unfortunately, I don't think that Gina will be there. We'll see. Please cross your fingers, cross your toes, say a prayer, whatever it is, that Gina somehow is still around. But to my knowledge, Gina shouldn't be there anymore. I think that the last one was in December, and that makes me incredibly sad. So I'm going to need you guys more than I've ever needed you during this. I'm going to need your support. I'm going to need your hype. I'm going to need your likes. If you could smash that like button, please hit the like button right down there. Hit it. Pump that up. If you're not subscribed, join us. We are live here regularly doing technical analysis, live trading, talking about crypto, and in general just being weird. Join our Discord. We got a lot of stuff. Yeah, got a lot of stuff here. Help me hype it up. It's going to be a hell of a stream. We have a poll going. Please answer it. We got almost 800 votes. Let us know your opinion. If you're new here today, say hello. What else we got? What else we got? Yes, the trading diagram. So there are no guarantees in trading. None of this is financial advice. I just do the best I can. I'm sharing my thoughts. However, after watching these live for many years, we have seen a pattern emerge. This pattern, I would say 75%, certainly more than 50% of the time, we see this happen. That pattern is whatever market or whatever direction Bitcoin is trending into the interest rate decision. So into the next 22 minutes, we tend to see that reverse. That would be right here. And then when Chair Powell starts to speak, we tend to see that reverse again. So what this ends up looking like is some kind of diamondish, whipsawish pattern. Basically, the long way of describing what I'm saying here is this is very volatile trading. Today is a very intense day to trade. If you have a leveraged position, I recommend maybe wrapping it up if you're in profits, looking to reopen maybe later in the day, maybe after market close. I do not recommend trading these. These are a great time to get liquidated in either direction, because if you kind of put your brain together, that image of this price action might look like this: a rally into the interest rate decision, a reversal, Chair Powell speaks, boom, hit stops short, hit stops long, and honestly, most of the time it ends up right back where it started. So cover yourself, practice good risk management today. If you are trading, check out our partners in the video description below. You can help support the stream by using our links. It's good stuff. You'll get bonuses and perks as well. What else we got? What else we got here? What are we missing? Need a haircut? Yeah, dude, I do. I do need a haircut. You're right. I was thinking about doing it again myself. I mean, really, I didn't have time to style it today. Maybe I should do one of these. How's that looking? Hey, little Johnny Bravo. No money, big whammies. That's right. Your lick is at 125K. Would I close or not? Gordon, I don't believe we will hit 125K today. unless we have an interest rate decision out of nowhere, or interest rate cut out of nowhere. If we have like 50 BPS, it's definitely possible. Usually, so the reason I say that this is so spicy is usually these probabilities into the decisions are very accurate. Right now, they're saying nothing. So any change up or down is going to be a huge curveball that is not priced in. So if we got an interest rate cut, especially a big one, that is likely to move markets very quickly upwards, very wildly upwards, more so than usual. Last FOMC, we had some very, very crazy price action. Let's actually go back and look at that quick. That was, can you take a guess? Right here. So kind of a bitter taste in our mouths from last FOMC. We had a new all-time high. And basically the next day we had our FOMC, and what happened? We spent 33 days, over a month, until we hit back to those same levels. We traded down 20%. Took a long time. It was grueling. The dollar made an inverse move to that, made a very spicy move as well. Oh yeah, look, I even have it still on the chart from here. I know that's the one from July. That's from a very long time ago. The dollar made the opposite move. I believe that was here, right here. The dollar blasted off, and we saw that rally really sustain for about the same amount of time, 26 days, a little bit less than a month, although it has lost a lot of that momentum now. And even on the day, I would say this is absolutely breaking market structure. That is starting to look bearish, and that's a good sign. That upwards pressure on the dollar was very painful for Bitcoin for a while. So last time was very savage. This time looking to be maybe equally savage. We'll find out. Canada announced they're done with quantitative tightening. That would be a big thing. So the Fed has two major tools, and that is the interest rate decisions that we all kind of hype beast about, and also quantitative tightening and easing. Quantitative tightening and easing are kind of a complicated topic, but you can think of it this way. When you quantitative ease, you create magic money out of thin air, out of nothing. This tends to move markets up. When you quantitative tighten, you remove some of that magic money, some of that made up and imaginary money. You remove that from the market. That tends to be rougher on liquidity, tends to draw things down. The US, I believe, has been quantitative tightening for 2 years. So even if they do not decide to change interest rates today, they could comment on the quantitative schedule for 2025. We are absolutely going to see the projections of where each Fed member, or the dot plot, believes interest rates will be into this year. That will update. That will be some very good data. I believe we're down to 3 cuts this year, something. I don't know. It's always changing. It's always updating. They're always looking for that god dang data. Give us more magical internet monies. That's right. We need it. We need as much magical internet monies as we can. Print it all. Print every penny of it. Print Bitcoin to the moon. Print dollars. Buy Bitcoin. Let's do it. We need that Federal Reserve stockpile. You know, I'm gonna say, guys, I'm pretty trolled. We heard all this talk about a Bitcoin reserve, and then now it's like a crypto stockpile. If we're gonna print dollars to buy cryptocurrency, is Bitcoin. Hey, printing dollars to buy shit coins, boys. I know you want it. You want your bags to pump, but let it be Bitcoin. They buy Bitcoin. Bitcoin goes up. Everything else goes up. Look, Bitcoin hasn't been blasting off like in the last bull runs quite yet. And you'll notice neither are your altcoin bags. Let Bitcoin pump. Let Bitcoin have this. Pump it and your bags will follow. That's what we need. He wants the Trump coin in the reserve. Dude, I feel like if the Trump coin gets in the reserve, we gotta like riot, right? Like that is, can we agree here? Like this isn't like an anti-Trump thing. This isn't just in general. In general, don't you guys feel like that is not a good thing? Wouldn't that be a bad thing? I think that would be a bad thing, guys. This is nothing to do with this policy, nothing to do with anything. That would be a bad thing. He hasn't said that. He hasn't even implied that. So don't get me wrong. I'm not saying this is happening, but I think that would be a very bad thing for everyone, probably except Trump. Yeah, Yeah, that would not be ideal. We'll see. Now, if you're holding it, I don't know, bro. I don't think that holding it would help. I don't think it would hold it. Who's holding it? Put a 1 in chat. You holding Trump coin? I bought some a few weeks ago. Of course, I'm under. I put very little into it. Who's holding it? I put a 1 in chat. Put a 1 in chat. You holding it? Hopefully, by holding it, you did what I did. You got like a tiny, you hedged. You put a tiny little bit in there. Hell no. There you go, Crypto Crank. There you go. Do anything about superficial loss? Crypto tax. Chad Haynes, I'm not a CPA. You're gonna have to ask a CPA. Superficial loss? I don't know what you mean by that. Do you mean like tax loss harvest? I don't know. I see a lot of ones. I see some negative ones. I see some other numbers. That's good. Scalped it only. That's better. Guys, even if it were to somehow get into this reserve thing, that would be bad. I feel like even if we're holding it, let's be real. The only one that would end up benefiting is that 80% holding the set, yeah, like the original supply. But I digress. I'm not touching it. Good, Dave. Good. I put like a few $100 in, just an amount where I was like, screw it. I'll let this. I waited for a retrace. I got like 36. I mean, I'm down like 50% already. I believe it's gonna rug. That's why I don't want it to be included, because I think it's gonna rug, and I don't want the whole country to get rugged. Yeah. Yeah. Anyway, we'll move on. We will move on to whatever topic. We've got 14 minutes. 14 minutes. What should we do in that time? That's enough time to do almost anything. And at the same time, not really enough time to do anything at all. Bitcoin seeming to getting a little energy, I guess, into this. The dollar as well, though. We're kind of seeing both Bitcoin and the dollar begin to track up here. Really low time frames. The dollar does look like shit. Does look like shit. Fall. Higher low. Wow. I'm not even going to make a call. Not even going to make a call. This could be very interesting. I think this is going to be very interesting. Most people not really think it's going to be as interesting as I do. I think it will be. I think it's really going to be, show us your skills. Trade some ADA. Shan't. What a name. Shan't. I shan't do that, Shan't. I literally, like 5 minutes ago, was talking about how I don't think it's a good idea to trade these. I say this every single FOMC. Not a smart trading day. Not a smart trading day. Let's look at Nvidia here quick. I know it's not crypto, but we talked about Nvidia on the last stream. I was very sick. I'm at like 80 or 90% energy now, or force. Slowly getting over this. Feeling definitely better. I've got energy from Chairman Powell coming on. He always makes me feel a little bit better. Asian Gino will definitely make me feel better. God, my lips are so dry. Asian Gino will definitely make me feel a little better. I don't think we saw her last time. We totally got rugged. Nvidia, man, I really thought we were going to see a bigger bounce here. I would not count it. I wouldn't count it out yet. But I don't trust that story. The deep sec, whatever it is, story. Do you guys? Like, yeah. So here's what I mean by that. I believe that China could have developed a more efficient AI. I believe that that is possible. I don't believe that it is to the degree that we are being told. I don't think it's to that degree. I think that's exaggerated. I think it's probably much more competitive than we think. And maybe even if it's not, it is open source, so it should be pretty easy for us to just copy, right? I really still think that this is fuddish. I think this is fuddish. I think it gets a bounce. I think that's really just a shakeout. Fake, deep fake. Like, it could be real, but I don't think it is like what people think it is. You know, does that make sense? It just doesn't add up. Something's weird. Something's just odd about it. The timing. I don't know, man. I don't know. I was going to make more statements based on the chart, but literally nothing has happened here, so I guess not. Let's look at stocks really quickly going into this. What do we got? What do we got here? Interesting. SPY, SPX, finally at the 2 measured move here. From the 2022 into 21 to 22 downward move using our fib tool. We hit our 1618 back in July of last year, and really, what is this in this year? In this year, within 20 points of the measured move target. This is where shit gets real. This is a reasonable place to take profit on the S&P. Like profit for like long-term profit. That's interesting. Interesting to pull back. It does look like it's holding on to a higher low. Dude, by the end of today, all of this could change. Everything could change that I'm saying. That's why I'm like kind of reserving some thoughts here. I don't want to go too deep because I really do believe this is going to get very, very crazy. Only for trade short, you think in the next hour? Good luck, Anto. I say it every time, guys. We tend to see price become very volatile in both directions on the FOMC, and that tends to leave both long and short traders wrecked. So you may be on the right side of the trade. You may go short. Maybe that's what happens. You know, today closes red. Rest of the week kind of continues selling off. Sure. But you may see a pop that liquidates pretty much every position on the longs or on the short side before that happens. So you may have the trade right, and you still may get punished here. This happens so consistently on these FOMCs. Just be careful. That's all I'm saying. That's all I'm saying. Let's look at Bitcoin here into the, wow, we got 9 minutes. We got 9 minutes into the decision going live. If you want to prepare your tabs, we have a little tradition here. At 2 p.m., the interest rate decision is released for some reason to news sources. Not to us, I don't know, but they don't announce it. But released, and we try to Google it and put it in the chat the fastest. So if you want to get your tabs ready, go ahead. Interesting price action for the corn here. We identified what was a triangle, or not triangle, diamond, inside of a bigger diamond on the last stream. I ain't gonna even make that diamond. Bigger diamond. Some people really hated this diamond on Twitter. They really didn't like it. I don't know why. Inside of an even bigger diamond. Hold up. There it is. Like that. The little diamond has broken to the downside. The big diamond actually still holding. So here's kind of my thoughts. Let's zoom out. Let's look at this. Here's my thoughts. This breakdown was pretty brutal. However, it is holding on to a higher low and actually starting to look pretty good. Let's zoom into this hourly time frame. If the FOMC was not happening today, I would be taking a long position. I would be looking to open a long if we did not have the FOMC today. That is going to be the detracting the one reason that I'm not going to look to open a position. Got to practice what I preach. Here's why. I'm liking this price action. What are we seeing? After a fall out of what probably a lot of people are going to look at as a flag, breaking to the downside, getting very bearish, seeking support. Buyers came in at 97.6, breaking 100,000 again. I believe someone got liquidated for 100 million. There was one position that got liquidated right here for 100 million. It was like a long, wild. Support came in. Buyers came in. Price bounced. Higher low. Tested $103,000. Profit taking. Sent it back down, but buyers again came in even higher, this time above 100,000. Retesting 103,000. Profit taken again. Holding a higher low for the what? 1, 2, 3, fourth time. Right now in this hour, we see 103,000 being tested again. So what is happening here? Buyers are coming in higher and higher and higher. Sellers are trying to hold the line of 103,000. However, each time price moves back to 103, that resistance is being weakened. The fuel, the wall, holding price down is being eaten away. This pattern very regularly in crypto breaks to the upside. In fact, it's one of my favorite patterns. If this were the flip side and we were seeing lower highs with a flat bottom, I would be looking for a sell-off. That's looking pretty good. So let's jump to actually the next. What's the next piece here? Let's look where we got. Right at the 618, right at that golden. Oop. Maybe not. Yeah, right at the 618, right at the golden Fibonacci retracement. Let's look at the full 0.5. 105,000. Let's do some witchcraft here on the chart while we have a few minutes to burn. 106, 107. Wouldn't that be trolly? It's like 106, 107. And then like bloop, right back down to 103. That would be so annoying. And then in the bigger picture, what would it be? It would be this. It would end up looking so unsatisfying. Just like that. Yep, that could happen. We'll see. This is getting farther out, getting less predictable, less reliable here. But I'm liking this low time frame. I'm liking this pattern. I'm liking the resistance testing. I'm liking support holding higher and higher. And I'm liking the timing right into this decision coming in super hot in just a few minutes here. There we go. We got 2,800 viewers. Let's go, boys. If you haven't yet, smash that like button. Subscribe to the channel. We have, I know, it's wild. It's crazy. Let's see. 1,049. 351. 650 subscribers away from 150K, boys and girls. Let's look at this. We'll look at it quick. We like charts and graphs here. It took this channel 3 years to get to 50K, almost. We have added 50,000 subscribers over the last 9 months. Over 5,000 subscribers per month, every month, for the last 9 or 10 months. Wild. We hit 100K in March of last year. On this trajectory, we'll be at like 160K, so we'll have gained, yeah, 60-ish, 60, a little bit more, a little bit less. By March of this year, let's go. Pump it up. Pump up that number. We can do it. We can do it. Let's see. 2 minutes, 30 seconds. Get your Googling tabs ready while I play a Chairman Powell song.
Chairman Powell, he ain't playing this blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserves in control, making moves. Keeping that money flowing so the economy can grow.
What up, bro? Vanderval, what's up, bro?
Chairman Powell making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rising the power. Yeah, he's the chairman of the board, making moves that empower.
There it is. There's the countdown.
Money machine going bird. Chairman Powell, he ain't playing this blur. Gotta follow the data, ain't no time to air. Watch him speak now with that
Tom Crown flair.
Yeah, Chairman, he's the
This song slaps. It's never gonna get old. There it is. There's the countdown. 1 minute.
Chairman Powell making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rising the power. Yeah, he's the chairman of the board, making moves that empower.
You have 40 seconds. 40 seconds. You can count them on your fingers and toes and your friends' fingers and toes. 30 seconds to go, guys. Get your tabs ready. Here's what we're going to do. We're all going to Google it together. Remember, no interest rate decision published counts unless the article is published after 20 seconds from now. So nothing right now. I want you to put the interest rate decision in the chat. Put your source. Don't just put a number. And whoever does it first gets a special, I don't know, nothing. But you get the honor. 7 seconds to go. Who's going to do it? Minus 25. Minus 25. It hasn't even come out yet. No one in the world knows. Pending. Who's got it? Nada. Nothing. Minus 25.5. 1 million, no change. Plus 69. Minus 0%, zero change. Minus 15, 4.5. A special nothing. What do we got here? Bring it down. Bring it down, Mr. President. It looks like a big zero. A big zero. Well, I think what we can assume is Trump's probably gonna be pissed. It's gonna be interesting. If we see any announcement from Trump during this stream about this, please let us know in the chat. Here we go. This is starting to feel a lot like last month here. The dollar pumping a green candle yet again. Bitcoin giving us the red salute. Oof. The red salute. The FOMC classic trading pattern seems to be playing out again. Rallying into this decision, we're seeing a move down right on the publish. Wow, I do not like this. This is making me uncomfortable. That dollar with that green candle. Boo. Boo, boo, boo. Ooh, volatility's kicking in. It's coming. Oh, it's coming. Let's go, DJ Tronic. What's up, my friend? How you doing? Anton Blanchard, I see you subscribing. Cardionin, how you doing? I'm your Huckleberry. Comedic subscribed. Van der Waal subscribed. Katakosa 7. Tom Hoffelnick. Unknown. Audrius. 93 hits. Shivan Kumar. Elvilla. We got a lot of subscribers coming in. You guys are the best. Name in Russian. I can't pronounce it. Welcome to all our Russian viewers. A Feral, The Victor, K-Jam, Philippe Eremita, Richie Vaughn's Pokemon. Pokemon, very relevant topic right now. What's up, Ronnie876? Everybody out there who's not subscribed, subscribe right now. I'll shout you out. We're getting them in there. Let me see. Do I have memberships to give away? This is gonna be a spicy day, guys. Can you feel it? Do you feel it? I feel it. Membership gifting. Oh, I gifted all 10 free ones. That's okay. Maybe we'll gift more. We'll see. No change on rates. The official FOMC of January 2025, the first one of the year, kicking it off to no interest rate decision. This goes against what Donald Trump was demanding, yelling about, I don't know, telling Chairman Powell to do. However, here we are, looking a lot like last month. Bitcoin in the red on that publish. The dollar spiking up. Not great. Not great. Remember I said no change, probably red day. That just seems to be how it is. That's what we've got so far. This was our last FOMC where we saw very similar price action happen. We bled for 33 days. The dollar pumped for like 26 days. Kind of gave back some of those gains over the last week. Fingers crossed that's not what we're looking at again today. Fingers crossed. Oh my. I might be a little too hopium-ish. However, we are still very much painting the same pattern. Even with this spooky candle, we were very zoomed in. Very, very zoomed in. Still in our pattern, though. We still got higher lows. Basically looking down here, 1015. Breaking 1015 is a great invalidation point for this. That would probably not be great, but at the moment we're fine. I don't want to jinx it though. It's picking up momentums. Uh-oh. Remember the, what is this? The 29th of January. It doesn't rhyme, so maybe they won't make a movie about it. Remember earlier when people were talking about taking positions and I said, it's not a great idea. We see a move into the interest rate decision. The interest rate decision comes out. That move reverses. What happens? It usually then reverses when Chairman Powell speaks, and we end up right about where we were. That is the typical FOMC trading pattern, and it results in everybody getting liquidated. So I said practice safe risk management. Try not to open positions. I do not trade these. I do not think it's a good idea to trade these. Whew. There we are. Dollar hitting a higher low on low time frames. Bitcoin struggling to find support, but as we said, still hanging out, still doing okay above 1015 on the short term. Let's look at maybe the 4 hour. Let's say right here. I'll take 1013. This is where I do not want to see it go below. Kind of looks like it wants to go there though. Yep, getting alerts. Dollar breaking out. Oh no. Oh no, and you didn't think it would be spicy. You didn't think so. That's where you were wrong, sucker. Ranging? Yeah, it's ranging for now. Well, I wouldn't even say ranging. I think Bitcoin in the short time frame still looks very good. This is still very, very good looking. Higher lows, flat top. All we have to do is hold this low. All we have to do is hold the 4 hour right here. 1013-ish. We can even test that. That would probably be healthy. Nice little test, little wick. Come back up, retest 103. And I think we're sitting pretty. However, the dollar is really threatening, man. We've seen Bitcoin and the dollar move inversely at times. We've seen them move together at times. Largely, we say when the dollar moves up, everything else has downward pressure on it. Over the last 6 months, though, that wasn't really the case. On the last FOMC, we really saw that come into play. The dollar started rallying, Bitcoin started dumping. That is why this is an uncomfortable position to be in. I did not want to see strength in the dollar again. It is the same setup as last month. Let's leave it like this. All right, let's see. 2,100 votes. Let's see how those votes wrapped up. By the way, thank you, Pickle, for gifting out some memberships. My guy. Pickle, my right-hand man. I love you, brother. I love you, my friend. It's good to see you. 46% of us, nothing burger. Probably a red day. Well, so far, we've got the smartest viewers in all of the tubes. All the tubes. We have the smartest viewers. See? We predict the future together. Yeah, I do. Dude, I need a haircut bad. My hair is all over the place. 7% hike. That was a very outlier, but hey, it could have happened. 34% cut. That was the hopium. I appreciate that. I'm going to end this poll. Let's add a new one. We have 23 minutes till Chairman Powell is live and speaking. 23 minutes until, if God has us, Asian Gina will make an appearance. Maybe even regular Gina will show up in America. Maybe there'll be some protesters. Maybe Chairman Powell will say a curse word on live. Just shut the fucking door. Shut the... That was the pinnacle of Chairman Powell. Can I get a Chairman Powell? Can I get a little Chairman Powell in chat? A Chairman Powell? A Jerome Powell? A little Chairman Powell in chat there. A Chairman Powell will speak blah 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 today. Let's say hawkish, dovish. He won't. He will have to wait for the data and then see results. Let's get another poll going. Let's get that engagement up, boys and girls. We got 20 minutes to blast this stream off. Let's hype it up. Vote in the poll. Smash the like button. Subscribe. Join our Discord, discord.gg/AtomCrown. Links in the chat. Also. Join our new premium exclusive trading group. Join it. We have live streams, exclusive live streams every day of the week. We've got analysts from all over the world putting in the alpha. It is the best way to invest in yourself if you want to become a better trader. Join our community. And to back that up, because it's not just BS. You know, we don't BS here. You can sign up now. I just enabled this. You can get a 7-day risk-free trial. So what do you got to lose? Sign up. Sign up. I mean, you're like, oh, it's too expensive or something. That's fine. See what we're offering. Enjoy it for 7 days. Check it out. That is how confident I am that you're going to enjoy that content. Links in the video description below. It's in the chat. It's pinned to the top. Let's go, boys. No excuses. It's free. You got a free trial. Just check it out. I'll see you in there. Shout out to 𝐂𝐴𝐿 and CVO. Trump live. Where's Trump? Trump's live? Wait, Trump's live? Is he yelling about? Is he yelling? Trump live? Is he yelling? What? What? He's going live? Whoa, whoa, whoa. Hold up. I gotta find where he's going live. I'm not doing Fox News.
Thank you.
National emergency.
Thank you.
Well, thank you. Hold up. This is a
Recent
surprise.
years, our nation has suffered greatly, but we are going to bring it back and make it great again, greater than ever before. We will be a nation like no other, full of compassion, courage, and exceptionalism. Our power will stop all wars and bring a new spirit of unity to a world that has been angry, violent, and totally unpredictable. America will be respected again and admired again, including by people.
I thought this would be about interest rate cuts. Maybe not. He was probably throwing a jab, though, right? A little jib.
We will be proud. We will be strong, and we will win like never before. We will not be conquered. We will not be intimidated. We will not be broken, and we will not fail. From this day on, the United States of America will be a free, sovereign, and independent nation. We will stand bravely. We will live proudly. We will dream boldly, and nothing will stand in our way because we are Americans. The future is ours, and our golden age has just begun. Thank you. God bless America. Thank you all. Thank you.
Were we not independent and free? Sorry, guys, I'm distorting it because I don't want to get striked. So we're going to mess with it. So it's like hard. I don't know. Don't tell me when. Audio up.
Thank you very much, everybody. Well,
thank you, Bella.
Thank you very, very much.
Yeah.
Vice President Vance, Speaker Johnson, Senator Thune, Chief Justice Roberts, Justices of the United States Supreme Court, President Clinton, President Bush, President Obama, President Biden, Vice President Harris, and my fellow citizens. The golden age of America begins right now.
Sounds like his inauguration speech. He said almost that word for word in his inauguration speech. Interesting.
From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation.
This is old news. All right. People said he was live, and that was live. I wonder why. Why was that live? Well, I thought it. I didn't read it. Is there another one? Why was that the first result then? Huh. Is there a different feed, or is that it? That could have been it. Maybe there was a nothing burger. We got bamboozled. It's okay. We get bamboozled. When you're live, sometimes you get bamboozled, bro. That's how it is. He's live because the signing of the 𝐂𝐴𝐿 Act. Nothing to do with the Fed decision. Yeah, but you never know, man. This guy loves to inject stuff. Where's this 𝐂𝐴𝐿 Act? Trump live 𝐂𝐴𝐿 Act? Huh. It's interesting. It's interesting. Has this already happened? Did it already end? Was it like a 1 minute live? It just like went live and I know it's going live. Okay. Okay, he's coming in. Huh. This is interesting though. Okay, I don't even know about the Lake Act. I'm not gonna comment on it. This is interesting. The timing. He's deciding, and remember, this is not coincidence. He is deciding to do this 15 minutes before Chair Powell comes on. Definitely a power move. He's speaking now. Definitely a power. Yeah, I'm not going to put Fox on though. Fox will strike us. Is anyone else covering it?
Been making extraordinary progress. The American people gave us a clear mandate to save our country, and we won all 7 swing states by large margins, historic. Very importantly, we won the popular vote by millions and millions of votes. Also, all 50 states, as you know, shifted toward the Republican Party, and that's never happened before. All 50, every single one of them. In our first week in office, we set records, taking over 350 executive.
It's weird because this is
that's
like
been
the
done
same
before.
speech.
And it has reportedly been the single most effective opening week of any presidency in history. And we want to keep it that way. We want to keep it going.
But this is interesting. It might not comment on the Fed, but it's
We
still
want to keep it going. We've broken
odd.
from decades of failed Washington policies
It's
and
odd.
restored common sense and sanity to our government. We've unleashed American energy, and we've already achieved record low illegal immigration. As you see, there's nobody trying to get in, and that's what we've been
Is this another one? All right, I'm done. I'm done. Wait, no, this isn't it. This is 12,000 people watching it.
waiting for a long time. And
Repeat speeches. All right. Well, I'm done checking them. I'm done checking them. If that's another one. Why are there so many like live? And those are all like live, like new streams from like channels. I don't know, man. That's weird. That is odd. That is to scam you. Yeah, he's like about to be like, and send me your Bitcoin because I will double it. Okay, so we're not gonna play it. It's okay. We only have 10 minutes till Chair Powell comes on anyway. But here is the interesting thing. This is clearly intentional. This is clearly intentional. The timing, the overlap with the Fed decision, with Chair Powell going live. There's no way this is just random. Like, oh, I just chose it. Like, didn't know the Fed was gonna go live. I don't know about that, but is it to overshadow? Is it a power move? What do you guys think? People worship him. Yeah, that's true. Bitcoin dumping 101,500. Here we go. Looking to hold a higher low here on the 4-hour to sustain this uptrend. Now, you could argue that it's a little hazy here where exactly this will end. A little hazy. But this is where I'm looking. $101,290. Hold this low. We can test it, maybe tag it a little bit, but we got to move right back up. If not, man, we're going to lose this beautiful structure. That would be a shame. We're seeing very similar price action to the last FOMC, where the dollar showed absolutely crazy strength. Bitcoin began dumping. It sold off for like 30-ish days. Here we go. The dollar making that same move. Bitcoin making that same move. This is uncomfortable. Uncomfy. $101,290 in the sand. 99K coming? Probably. If it's just a wick, we're fine. Trump is a master player. He's a player. Powell will get less attention now? Yeah. Well, I don't like that, Bad Fox. I don't like that because I try to cover Trump, but apparently it's just stream after stream after stream of bullshit of like other non-lives. I don't know. That's okay. All right. There's no way this isn't live. We're not going to actually play it though.
As was explicitly stated, this in no way affected Social Security, Medicare, Medicaid, or other entitlements that Americans depend on. I've made abundantly clear
I
from the
already give up.
very first day that I ran from office. That was a long time ago now.
This audio is
That's
terrible.
2015. If you think about it, I announced in 2015 and we won in 2016.
What's up, trade tuition?
We did very well in 2020, but we did really well just recently. And I'm restating right now to correct any
I can't tell if this is the same one of the same ones we just listened to, man. He's saying like the same things about how great they're doing. Is the Trump live legit? I don't know, dude. I do not know. I can't tell. That's old live, it's new live. It's okay. No matter what, this is live. This stream is live, and we are going to have Chair Powell live here in less than 10 minutes. Trump's supposed to be speaking. For those of you tuning in, no interest rate decision has sent Bitcoin tumbling down again, just like the last FOMC. The dollar showing strength off of that nothing burger change. But the big story that is breaking and apparently hard to actually follow, Trump staging his own press conference minutes before Chair Powell, and I have a feeling it will extend into Chair Powell's speech. What do you guys think? Who cares? Talk Bitcoin? Yeah, well, I'm trying. I'm really just trying to burn time till Chair Powell starts. Minutes into it, maybe a power play, maybe something else. I don't know. Remember, Trump did tell Chair Powell to cut interest rates. They did not. So I said, tell me if Trump makes any statement during this live because I want to cover it. I want to see what he's saying. I wanted to see if he would make a comment on the Fed doing nothing and not paying attention to him, not listening to him, not obeying him, whatever it is. Remember, the Fed does not obey the U.S. government. It's not supposed to by design, but this regime is changing things. So we'll see what happens there. I don't know. Strategic and nerve or not, that would be crazy. That'd be crazy. Do not panic. Do not panic. It's going to be okay. Is this live fake, Marcelo? Yes, it is fake. He is live now. It's interesting. What's up, 𝐂𝐡𝐚? Gifting away a membership. Thank you, darling. Thank you, 𝐂𝐡𝐚. Alts are dying. Let's check in on alts dying here. They faded the golden cross again. We found this, I don't know, like last week or something. We tweeted about it live. Bitcoin dominance, the decider of alts fates, performed the golden cross on the day, January 24th. We have seen dominance rally, and dominance, this is interesting, dominance painting the pattern that I'm really hoping holds here on the Bitcoin USD. Really hoping holds here. Higher lows, looking to retest that 60%. Now, dominance is not actually traded. There isn't really resistance or support in the same way. However, it seems like everything in the universe obeys chart rules. By that, I mean vaguely or somewhat. We see it very predictably move as if it were a traded asset. Retesting that 60% coming off higher lows. We got the golden cross on the day. We have been waiting here. We've been talking of higher dominance highs. This is why alts are not feeling great right now. This is why alts really haven't had the run that they've had in other bull runs. Dominance has not given them any room to breathe. With that bullish sign on the day, this is going to be very interesting. If dominance breaks above 60%, it is incredibly likely to retest its high of November of last year at 61, 62. This is going to put a lot of pain on alts. Breaking higher is going to be somewhat unheard of. That's going to be more of uncharted territory. Remember, in the cycles that we have seen, we have had a very predictable pattern. We don't have a huge sample size, but it's been consistent for the time we've had. We have lots of time elapsed, but only, one cycle, 2 cycles, 1.5. Basically, each bull run or alt season bull run, face melting bull run that we know has begun with dominance plummeting from the sky. In 2021 in January, right as Bitcoin was breaking its all-time high, dominance hit a higher high before dumping. So maybe we could even say we might look for something like this, right? Kick off alt season with a higher high. Either way, we have seen in bull runs dominance dump, and this can be explained by higher risk tolerance, people looking for bigger gains, basically greed growing. So far, we have seen Bitcoin rally for 2 years, almost 3 years, and no sign of dominance weakness. We had that sell-off in November. I'll say that was a sign of weakness. However, it seems to be regaining that now in this week and over the last few days. Unless if it breaks higher, unless it's just a wick and fall, man, this is unprecedented. This is going to be very interesting. But this is the exact reason. This is the chart you should be watching if you're sitting there worrying about your alt bags. There is a possibility that it's just going to end up looking like this. That would be good overall, as that would kick off what we know as a bull run. Everything up only mode, right? Higher high, fall. Maybe. I don't know if I don't know. I'm not ready to call that. I'm just saying what it looks like, what it could look like. But this is showing strength yet again. Higher lows, retesting resistance. Very similar to what we are looking for here. Yep. Very similar to what we're looking for right here on the corn. Flat top, higher lows. So far, good news, 101,290 has held for the moment. And thank God, Chair Powell will be speaking in like 3 minutes. Man, I've been bad at burning time today. I'm still a little sick, guys. My brain's pretty fried, but I'm doing my best here. I've successfully burned the time because we'll be on. But we have held the low for now. And typically when Chair Powell speaks, we see a reversal again into the decision. We see a reversal. When he speaks, a reversal again. And man, that timing is perfect. Please, Chair Powell, please save us. The dollar's still pumping strong, though. I don't think the dollar's done. Is it live, Larry? Could be. Let's refresh this. Let's get ready. Put on their terrible waiting music. Check their audio. It's always too quiet. It's always too quiet. Turn up the gain. There it is. You like flat tops, do you? You like flat tops? You like digs? I like digs. You like digs. All right, chat box down. You gotta untransform this. There we are. We are moments away from the biggest, craziest FOMC of our lives. Trump is live. That's right, Niels. We tried. It was a fumble. I couldn't get it on. Is anyone following that? Is anyone following the Trump? The live speech? Can you tell me, has he gone off topic? Has he talked about rate cuts? Has he mentioned anything that might be relevant? Give us that alpha.
Chairman Powell, money machine going bird. Chairman Powell,
let's leave this on for a minute or two.
Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserve's in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell,
I need Gina.
Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rising the power. Yeah, he's the chairman of the board, making moves.
Talking about inflation, that's relevant. Captain of the crew. Captain of the hair crew, man.
Chairman Powell, money machine going bird.
You hate Chair Powell, Felix, no?
Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew.
End of an era, baby.
Markets knowing what to do. Federal Reserve's in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rising the power. Yeah, he's the chairman of the board, making moves that empower.
Just seconds away, boys. Seconds till Chair Powell is live. Unfortunately, lacking a miracle, there probably won't be any Gina. I think she's retired to greener pastures. It's a shame. What's up, Tim, my guy? If you're out there real quick, smash the likes. It's starting up. It's going to be big. He's always fashionably late, don't worry. Here, let me get up. I'll get up there. I'll get up there. Ladies and gentlemen, colleagues, thank you for joining. I am Chairman Powell. I'm going to cut all the rates. Negative rates. We're going to the moon. Thank you. This has been my press conference. No questions. Except if Gina's here. Is Gina here? Anyone out here? Gina? Asian Gina? Feel like I've been stalling. Oh, ooh, I better run.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid.
Yeah, he's going in hot.
Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance.
Trading indicators?
The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review.
How good.
The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices.
It sounds like
we remain
ChatGPT
committed to
wrote
supporting
this.
maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Shut up, Gina.
Mr. Chairman, Steve Leisman from CNBC.
Still be hopeful.
Mr. Chairman, at a event in Davos, or from to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if any,
I like this guy.
does a president making these kind of remarks have on policy? Thank you.
I'm liking that guy more and more.
3 questions.
Yeah, that's a lot of questions,
I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
No.
I've had no contact.
Thank you.
Okay.
Thanks.
Fair. I like him, though. That was ballsy, dude. That's ballsy
Chair
for
Powell,
them.
you and several of your
Chair
colleagues
Powell,
said
you did it.
around
Drink.
the time of the last meeting that your policy stance was meaningfully restrictive.
Oh, hello there,
Given
lady.
economic
Who's that
and
behind
financial
you?
market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we literally look at the movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings, and you see we don't overreact to two good readings or two bad readings, but nonetheless, the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Armpit.
Colby from the New York Times.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market. And we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
Are you sure?
Follow up. We've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, and actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel the economy, that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
Hold on, wait for now.
We're looking, it's more the other, the way it works is we are looking at the data to guide us in what we should do. And, you know, that's what we do. And right now, we feel like we're in a very good place. Policy's well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And you know, as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Oh, yeah. Because they were tasked with some kind of equality thing.
Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
Smashing them likes and subscribe.
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and you know, it's one of the best things that they do. And in each Teal book, you can look at the 5-year-old Teal books and see they're alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, you know, the policymakers to sort of think and understand about the you know, the uncertainties that surround this. So yes, the staff does that, and we're all well aware that that the range of possibilities is always broad, and not just now, but always. And you have to. It's hard to be open to just how broad the possibilities are for an economy. You know, no one saw the pandemic coming, and it was, you know, it changed everything. So things happen, and but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case, but you don't act until you see much more than we see now.
Katerina Saraiva, Bloomberg News.
See what she's got.
You know, last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, then we seem to be set up for further progress. But being seemed to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good, but if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
So quantitative tightening will continue.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
The Fed is also not a government body funded by the
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Absolutely.
Chris, I'm not going to react or discuss anything that any elected politician
I will. Energy costs are a huge factor in inflation.
might say. So I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
No comment.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course, as I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Has anyone seen Victoria in the last one of this one at all, even in the background?
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes, never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, you know, the kind of footprint of trade has changed a lot as trade is now spread around. You know, it's not as concentrated in China as it was. There was a lot more manufacturing.
Like how every question has been like somewhat political or about Trump, and he's like, I'm not going to answer any questions about anything, any political or any candidate or any people in office. And the next question is just like, so about Trump. What do you think about Trump?
Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2000 and I guess 18. Yeah, we didn't really know, and the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. You know, there are lots of places where that price increase.
Thank you. Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So, let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support the smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon.
Simon Rabinovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are going to they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, we found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt Egan.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look at, from a financial stability perspective, at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
That
Hi, Chair
cut
Powell.
looked like
I'm
The
Richard
Office.
Escobedo with CBS News.
Why did that look like The Office?
One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier. One is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level, because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But, overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy, is, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see, there's nothing in the data yet on that, but you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But you don't see that in the aggregate data yet, but yes, you hear it anecdotally.
Nick. Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today, and I'm wondering, are there any periods from your career, or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut, or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy's strong, the labor market's solid, downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts?
You know, it's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, you know, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see, you know, continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? We expect to see that. It's just a question of when.
Scott.
Hi, Chair Powell. Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it, if I'm being at all unclear. We're not going to change the inflation goal anytime soon.
I like that.
And 5 years ago, if I can paraphrase what y'all decided, was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid.
Unfortunately, every question about quantitative tightening that they've asked, he's basically deflected and said there's no date for it to end. There's, you know, they don't see it ending now. It's not at the point where they're considering it. Not good.
Labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, you know, we said, what we said was that, you know, at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And, you know, our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Let's go to Mark for the last question.
There we go. Last question. Let's go.
Hello, Chairman
Hype it
Powell.
up for
Mark
last
Hamrick
question.
with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
He ain't gonna say anything.
You know, so our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and you know, we think it's banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As a good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in asset plans?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time, with members of Congress, working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
That was last second banger, last second ringer. Not a bad question to end on. Thoughts. The event has now ended. Thoughts. No interest rate decision. That is what we were pricing in. That's what was predicted. It's going to be interesting. I'm going to listen for any kind of updates from Trump. He's almost certainly going to speak. He's certainly going to comment on Chair Powell not listening to him. Chair Powell did a great job deflecting questions, as always. He said Bitcoin. That's big. Unfortunately, quantitative tightening. This is the big kind of hawkish take here. Let me see what we have on the poll. On the poll, what do we got? 2,000 votes. Hawkish 31. Right again, ladies and gents. Hawkish tone there as he was talking about, or any questions about quantitative tightening. He essentially deflected when they asked of any kind of timeline. They said there is no timeline. If they asked, are they close to ending it? He said there are ample reserves. Basically, hawkish AF, looking to continue quantitative tightening. That is really what we want for only up mode. That is unfortunate. We're gonna have to wait till next month, I suppose. The biggest story of the entire FOMC, no Ginas. We got rugged. All of our Ginas somehow gone here. No more. 0 Ginas. We knew we were losing original Gina or OGina, but Asian Gina, that is a surprise rug. My whole life is being rugged right in front of me. I appreciate you guys joining. If you haven't subscribed, please subscribe. We cover these every month. We were the first channel doing it, and we'll goddamn be the last channel doing it. Thank you for joining us, everyone. You are the best. I love you. We will be live again very soon. Good to see Bitcoin making a little move up here, gaining some strength. This is in good contrast to the last FOMC that began a 33-day downtrend. Here we are looking for higher highs into today again as Chair Powell wraps up, looking into that 105,000 mark. I like that a lot. If you missed it, I don't know how you could have missed it, but if you missed it, check out our course. So loud. Sorry about that. That was really loud. Check out our trading group course. It has all the signals, setups, analysis, daily, exclusive live streams, all kinds of goodies. And you can get a free trial, risk-free trial. I just enabled that this morning, so I'm pushing it hard today. Go sign up. What have you got to lose? Nothing. Check it out. That's how confident I am in this product. I hope to see a lot of new faces in there soon. We got a lot of new subscribers, a lot of new fam members today. Beautiful day, guys. Go and enjoy your Chair Powell list, I guess, end of the day.